SRS is a good way to help us save on taxes while saving for retirement. However, the problem with SRS is that it only gives us a set 0.05%, which is low until cannot low. Might as well don't give. However, once your money is in SRS, you might be too scared to invest into stocks. Later the market jiba-boom, then how? So, in this video, I'll be showing you 5 ways on how you can invest your SRS money with as little risk as possible while getting a good return of around 4% or more. Alright, let's jump into the first method, fixed deposit. See all these super high interest rates? Wow, 3.95%. But too bad, you can't invest in them because all these are promotional rates that's only available for cash investments and not SRS funds. So the rates that you'll be getting are non-promotional rates. But surprisingly, the rates are actually not too bad. DBS is currently offering a good 3.2% with a tenure of between 12 to 60 months. But this rate only applies for investments less than 20k. For a bigger amount, you can check out UOB, which is giving 3.2% with a tenure of 36 months up to $1 million. Okay, OCBC rates are a little low as they only offer 1.5%. But here's the good news. You can actually place FD with any of the 3 banks regardless of which bank you open your SRS with. However, the big downside with investing in FD is that you can't do the investment online. You have to head down to the branch to apply. So it's not that convenient, yeah. But if you do decide to head down to the branch, don't be dumb and just queue for hours there, yeah. We are already in the 21st century, yeah. For DBS, you can get the queue number online before heading down. UOB also has a similar system, same for OCBC. But if you are too lazy to go to the bank, here's the next method, government bonds. This one can apply online. I'm sure right now you are already familiar with the government bonds. But just in case you're not, here's a super quick summary. SGS is a long-term bond that can last anywhere from 2 years all the way to 50 years. T-bill is basically like SGS, but the short-term version of it, where they only either last 6 months or 1 year. And finally, SSB lasts for 10 years. Both SGS and SSB pay out interest every 6 months, while for T-bills, rather than paying you interest, the bond is issued to you at a discount. So, for example, if it's a 1-year T-bill offering 3%, if you invest $100, you'll get back $3 at the start, then get back $100 when the bond matures. In terms of flexibility, SSB is the most flexible, as you can actually redeem and get back your money early and not lose any money. As for SGS and T-bills, if you want to get back your money, you will have to sell the bond on the open market, usually at a loss. Okay, let's check out what kind of interest you can get from these bonds. As of March, SSB is offering a 3.15% interest. The latest 2-year SGS is giving a 3.66% interest, while the latest T-bill is giving 3.93% interest. So let's go for the T-bill. Hold up, don't just look at the yield to decide. You also need to look at when you need the money. If you don't need the money now, go for either SSB or SGS to lock in the high interest rates for a longer period. Because those high interest rates, they won't last forever, yeah? And they may be coming down soon. If you need the money in the short term, then go for T-bills. So that's government bonds. If you need a tutorial on how to apply for them, you can check out this video here, where I show you a step-by-step guide on how to apply for the bonds. Good news! Due to popular demand, Weibo has decided to further extend the promotion. By just funding any amount into Weibo and maintaining the funds in the accounts for 30 days, you will get 5 free shares worth up to $500. And it's not just any random meme stocks, yeah? The stocks are good stocks like Tesla, Apple, Amazon and Google. This promotion lasts till 15 March 4 PM Singapore time. So if you have not signed up to Weibo yet, chop quickly sign up for it using my link down below before it ends. With that being said, let's get back to the video. Next, unit trusts. Unit trusts are similar to ETFs, where it's a basket of investments and you are investing in this basket. But for unit trusts, there's a fund manager behind managing the investments. So the fees will be higher as compared to ETFs. So what unit trust can you buy? Let's check out FSM1's fund selector. If I want to invest in the low risk stuff, at risk rating, I will just choose the lowest risk rating. For the payment method, choose SRS and generate the results. You can see that no matter which funds you choose, the performance is quite stable. That's because these funds are money market funds. Basically, they invest in short-term deposits, so they are very stable. Fun fact, because of how stable these funds are used by Robo Advisors and brokers to generate a yield. For example, Safe Cash Plus uses Lion Global SGD Money Market Fund. Endowment uses Fullerton SGD Cash Fund. Weibo also uses Fullerton SGD Cash Fund. Right now, their yield is around 3.9%, similar to the T-bill yield. But the downside is that this yield is not fixed and can go down anytime. So only use this method if you are looking for a way to park your SRS money in the short term. As for where you can buy, there are 3 places that you can choose from: FSM1, Singlife Navigator, and Dollar Dex. Though if you are using FSM1, you can sign up with my link down below, yeah? Next, Robo Advisors. There are 3 Robo Advisors which lets you invest via SRS: Endowment, Money Out, and Stash Away. Each of them lets you invest in different portfolios. For example, for Money Out, there's Wise Saver, Wise Income, and Dimensional portfolios. So how to choose? Okay, if you want the lowest risk, we can't choose those long-term investment portfolios because even at its lowest risk setting, the portfolio can still give a negative return. So we will have to go with cash management portfolios like Wise Saver, which is giving about 4% currently. And the reason it can do that is because its underlying funds are the same funds we talked about earlier, like the Fullerton SGD Cash Fund. For Stash Away, it's the Stash Away Simple portfolios, and for Endowment, it's their Cash Smart portfolios. Besides that, Endowment has an extra Fund Smart portfolio where you can mix and match your own funds to build a portfolio. So if you want to do that, here are the safest funds that you can invest in. At the fund selector, choose SRS, select the 2 lowest risk levels, then sort the result by performance, and you will find a list of good low-risk funds to invest in. Last but not least, we have endowment plans. Okay, there are a ton of endowment plans where you can choose from, but in general, the idea is similar to our CPF. You invest the money for a number of years, then after that, you will start to receive payouts every year. Some plans will pay you your whole life, others let you choose when you want to end the payout. Though, don't expect too much of a return from them because the guaranteed return is very low and the non-guaranteed return are non-guaranteed. Keith from Investment Modes compiled a list of policies and we can see that the average return is only around 2.5%. So nothing too fantastic here, yeah? But the special thing about endowment plans is that it comes with a bit of protection. So if you touch wood, have a loss of independence, like you can no longer go to the toilet or eat by yourself, then this plan will pay you an additional 100% of your guaranteed monthly income. There's also coverage in the event of death and TPD. So in short, endowment plans give lower returns, but they offer a bit of protection. Okay, here's a quick summary of what I mentioned just now. If you need liquidity, you can invest in either unit trust or Robo Advisors portfolios, as they have no lockup period and they are currently offering around 4% yield. However, their yields are not fixed and can go up and down every day. Though, yields are expected to go down soon. If you want to lock in the yields, you have to invest in T-bills, which offer around 4% yield and let you lock in the yields for 6 months to 1 year. Or you can check out bank fixed deposits, which is currently giving about 3.2% yields for 3 years. For a longer period, you can check out SSB or SGS bonds, which let you lock in around 2.9% interest for a much longer period. Last but not least, if you need extra protection, go for endowment plans. The returns are only like 2.5%. But the good thing is that if anything happens, then you have additional protection. Anyway, that's all for this video. Hopefully, you find it useful. Like, share, and subscribe as I'll be posting new videos every Monday, Wednesday, and Friday.